Testing.
Check, check, check. Yep. Works either way. That was a mic check there. The Subcommittee on Housing and Insurance will come to order. Today's hearing is entitled An Overview of the Family Self-Sufficiency Program. Without objection, the Chair is authorized to declare a recess of the Subcommittee at any time. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the Chair for inclusion in the record. Without objection, members of the full committee who are not members of this subcommittee may participate in today's hearing for the purpose of making an opening statement and questioning the witnesses. The Chair now recognizes himself for 5 minutes for an opening statement. I want to welcome our witnesses, our members, and our audience here today for our Housing and Insurance Subcommittee hearing on the Family Self-Sufficiency Program. As we start to look at how to reform the housing finance system, we're going to do that this fall. We also want to look at programs that help those who cannot afford to purchase a home, and they utilize programs such as the Family Self-Sufficiency Program to reduce their dependency on welfare assistance and rental assistance that is provided by the government. We also are joined by 5 great witnesses, each of whom work in a capacity with this program, and we're looking forward to their insightful commentary and advice they have for this committee. The Family Self-Sufficiency Program is focused on helping families that are in public housing, Housing Choice Voucher Program participants, residents of NAHASDA assisted housing, and residents of the project-based rental assistance programs. The goal is to utilize a number of services coordinated through the program to help families with individual training to increase their employability and become less dependent on government assistance. These services can include basic education, childcare, transportation, education, job training, employment counseling, financial literacy training, mental health referrals, and home ownership counseling. While receiving these services, an interest-bearing escrow account is established for the family that can be used for any purpose once the family graduates from the program. The Family Self-Sufficiency Program is administered by the public housing authorities who work with a program coordinator committee that identifies partners, both public and private, for the operation of the program. Partners may include workforce investment boards, local governments, and local departments of health, just to give us a few examples. These families generally enter into a 5-year contract of participation that incorporates individual training and a service plan. The service plan serves as a guideline of goals and steps the family must make in order to graduate from this program. Through a family self-sufficiency coordinator, they receive supportive services needed to achieve economic self-sufficiency, increase their employability and income, and move towards independence from the public housing system towards ownership. In addition to the help families receive in supportive services, an interest-bearing account is set up. The difference between the initial rent and the increased rent due to increased income goes into the escrow account each month. The escrow account can then be accessed by the family for any means once the program is completed. So here you have a family who's gone through a program, they've got the training, they're self-sufficient, and they have a pot of money that they can use to put potentially down on a house. Or they can get a new or a used car that can effectively get them to work. It's a program that actually makes a lot of sense. So for the program to be completed, these families must comply with the lease, be welfare-free for 12 consecutive months, and the head of the family must seek and maintain employment. There's a lot of conversations we have about the programs that come through this committee and how effectively they work, but I think this is one where you look at providing people services and moving them from dependence to independence, and giving them that hand up that they need to get there makes a lot of sense. And again, I look forward to hearing from this panel on how we can take a new look at the program. What are the bright spots of the program? How is it working well? And what can we do differently to maybe make some tweaks or changes to the program so we can help a few more people? If it works for some, maybe we expand that small number and are able to grow it to a much larger number. So how do we take lessons learned, good and bad, and make improvements that can help more people? And I'm grateful for your participation. Looking forward to your testimony. And with that, I now recognize the ranking member, the gentleman from Missouri, Mr. Cleaver, for 5 minutes.
Thank you, Mr. Chairman. My mother actually enrolled in Midwestern University when we were still living in public housing. I think I was in the 6th grade when she enrolled in Midwestern to pursue her degree in early childhood and elementary education. Everyone can't do that and is not going to be expected to do that. And so I would have to declare that I think that the Center on Budget and Policy Priorities was absolutely right when they proclaimed this program, FSS, as HUD's best kept secret for promoting employment and asset growth. I was mayor, to fast forward, of Kansas City when George H.W. Bush signed this into law in 1990. And there was obviously going to be some apprehension about the program. But I think overall, I think that individuals who have successfully completed the program after 5 years of participation, and they received the funds to use for various jobs or housing needs, proves this program to be successful. And I want to welcome the opportunity to hear those of you who are kind enough to come in and provide us with testimony about the program. We're still waiting on some results of a comprehensive national assessment, individual experience in administrating and participation in the program. And I know that my longtime friend and colleague, Senator Roy Blunt, has introduced a bill over in the Senate, the Family Self-Sufficiency Act. And this bill, if approved, would make important improvements to the program, including the merging of housing choice vouchers, FSS program, and public housing, FSS program into one, expanding the scope of supportive services and allowing project-based rental assistance residents to be eligible. I plan to introduce a House version of that same bill shortly. And Senator Blunt and I have had conversations about this bill, and both of us are committed to trying to get a bill to the President's desk. So, Mr. Chairman, thank you for holding the hearing. I know this is not one of the more sexy issues to come up before the committee. You know, I noticed that, you know, the empty seats and people are not, you know, no popcorn or anything. So I know we'll try not to put you to sleep, but I'm going to ask that all of you witnesses to please, you know, put an extra ounce of energy into your responses as we move through this hearing. Thank you so much. Thank you, Mr. Chairman.
The gentleman yields back. Looking forward to a popcorn-filled, exciting hearing today. So with that, let's welcome our witnesses. First, we have Mr. Aaron Gornstein, the President and CEO of the Preservation of Affordable Housing, Inc. And our next witness is Mr. Jeffrey LaBelle, Principal Associate and Director of Housing and Community Initiatives at ABT Associates. We then have Mr. Spann, Executive Director of the Housing Opportunities Commission of Montgomery County. And then we have our fourth witness, Mrs. Kristen Singland, Senior Vice President of Policy at the Housing Partnership Network. And finally, but not least, we have Sherry Riva, Founder and Executive Director of Compass Working Capital. So in a moment, the witnesses are going to be recognized for 5 minutes each to give an oral presentation of their testimony. Without objection, the witnesses' written testimony will be made part of the record following their oral remarks. Once the witnesses have finished their presentation, each member of the subcommittee will have 5 minutes within which to ask our panel questions. I would just note that on your table you have 3 lights. The green light means go. The yellow light means that you have 1 minute left, and the red light means that your time is up. It's pretty self-explanatory. The microphones are sensitive, so please make sure you are speaking directly into them. And so with that, Mr. Gorenstein, I recognize you now for 5 minutes.
Good afternoon, Chairman Duffy and Ranking Member Cleaver and distinguished members of the subcommittee. Thank you for the opportunity to testify regarding the Family Self-Sufficiency Program, or FSS. I'm Aaron Gorenstein, and I serve as the CEO of Preservation of Affordable Housing, or POA. We're a private nonprofit organization whose mission is to preserve and create affordable homes that support economic security. Since its founding in 2001, POA has preserved or built more than 9,000 apartments in 9 states and the District of Columbia. We believe that access to affordable housing is a crucial step in overcoming the challenge of poverty. But we also know that stable housing is only one part of the solution. POA is committed to using our housing as a platform for the delivery of support services, like on-site after-school programs to boost educational achievement, budgeting programs to maintain tenancies, or job training to help residents increase their earnings. That's why POA was one of the first private owners of HUD-assisted housing to adopt FSS. Last year, we launched the program at 4 sites and then expanded to 7 this year with 1,100 eligible households. As the ranking member may know, we just launched at Hawthorne Apartments in Independence, Missouri, for example. After 18 months, the program's early results are very encouraging. We've enrolled 30% of our eligible households, which is 6 times the national average. At one of our original sites, 65% of the target households are engaged in working towards earnings and savings goals. We've already seen an average increase in earned income of 14%. The percentage of participating households who are employed has increased by 19%. And we've had 3 households graduate from the program by reaching their self-sufficiency goals and ending receipt of TANF assistance. We attribute this early success to 3 key factors. First, our programs implemented by very committed and well-trained property managers and a highly effective service partner, Compass Working Capital, and you'll hear from Sherry towards the end of this panel. Second, we used a site-based service model, allowing participants to access financial coaching, workshops, and other resources where they live. And third, the HUD staff have been fully committed to making the program successful. We also appreciate Secretary Carson's personal interest in the FSS program. Finally, I want to suggest a few recommendations. First, we're hopeful that Congress will create permanent authority for FSS in privately owned assisted properties. The lack of permanent authority means that owners face the risk that their program may lapse in any year, leaving them unable to deliver on the commitments they've made to participating families. And second, we encourage Congress to clarify that the escrow incentive should stay in place until a resident reaches 80% of area median income rather than the current 50% cutoff. The current limitation prevents the program from helping some residents climb the last few rungs on the ladder to economic security. POA strongly supports Senate 1344, which Congressman Cleaver mentioned, a bipartisan bill introduced by Senators Blunt, Reed, Scott, and Menendez, because it responds to the opportunities I've mentioned and makes a number of other important improvements to strengthen the program. We certainly hope the House will introduce legislation that mirrors those important provisions. In conclusion, I reiterate POA's conviction that the FSS program is a very promising tool that private owners can use to help residents increase earnings, grow savings, and reduce dependency on public assistance. We'd be pleased to work with the subcommittee on any improvements and enhancements to the program, and thanks you for giving me the opportunity to testify.
Thank you, Mr. Goldstein. The chair now recognizes Mr. LaBelle for 5 minutes.
Good afternoon, Chairman Duffy, Ranking Member Cleaver, and distinguished members of the subcommittee. Thank you for the opportunity to testify regarding the FSS program. My name is Jeff Lubell. I'm the Director of Housing and Community Initiatives at Apt Associates. We're a mission-driven research and consulting firm based in Cambridge, Massachusetts that conducts program evaluations, performs research, and provides technical assistance and consulting services on a wide range of social programs. I've been researching and writing about FSS for about 20 years. Count me in the camp that opens up the popcorn when something new comes out about FSS. Mr. Ranking Member, I appreciate the metaphor there. I'd like to cover three main things. The first, just to elaborate a little bit more on how the program works. The second is to summarize what do we know from research about FSS. And the third is to identify quickly some of the steps that HUD has taken in recent years to improve the program. So, as has been mentioned, FSS was signed into law by the first President Bush. It's enjoyed a long history of bipartisan support over the years. It has three main pieces. One is stable, affordable housing. You need that to be able to focus on getting and keeping a job, but that's not enough. The second piece is case management or coaching to help participating families achieve their career and financial goals. And here I just want to emphasize that this is a very cost-effective approach. It's not about duplicating services. It's about linking families up to services that exist in the community. The third part is a financial incentive for families to increase their earnings in the form of an escrow account that grows as their earnings grow. Basically, everybody in subsidized housing pays 30% of their income for rent, right? But if you're in this program, an amount that's equal to the increase in rent that's attributable to the increase in earnings goes into this escrow account. And you get that money if and only if you succeed in graduating for the program, or if you qualify for an interim disbursement, like if your car breaks down and you need help getting through. This is important because it helps people get used to paying higher rent, which is an important part of transitioning ultimately to private market housing. To graduate, you have to achieve the goals that you set out, and you have to become employed, and you have to get off of welfare assistance. All of those things, I think, things that we would all support. Now, the research evidence, on balance, the research evidence is positive. HUD has funded 2 national studies that examine the growth of earnings of FSS participants over time. Both found that earnings grew substantially. The most recent study found that after 4 years, about a quarter of the families had graduated from FSS. Their annual earnings had increased from an average of $20,000 in 2006 to $33,000 in 2009. That's a $13,000 increase, and it was not a particularly strong period for the economy. And they had about $5,294 on average in their escrow accounts. Another quarter were still enrolled in the program and had experienced meaningful gains in earnings and hours worked, and had escrow balances about $3,500. They hadn't graduated because the program's a 5-year program with an opportunity for 2 years of extension. So that's partly what's going on there. There were families who were no longer in the program. We could talk about that. It doesn't work for everyone, but it works for a large share of people. Unfortunately, there was no control group for this study, and that's really important. You need a comparison group, right, in order to be able to say something definitive. HUD has commissioned a randomized controlled trial. The early 2-year results from that trial are expected later this year or early next year. But remember, FSS is a 5-year program. Those early results are only going to cover 2 years. So we're not going to have long-term outcomes for many, many years to come, but stay tuned. It's going to be an important study. Now, there have been a number of local evaluations. One of them is something that we just conducted of the Compass Working Capital programs in Cambridge and in Lynn, Massachusetts, that they administer in partnership with the housing authorities. And that looked at results after 40 months, and were generally very positive. Specifically, when we compared the results for FSS participants against a comparison, we saw that the Compass FSS participants had earned $6,305 more. Their annual earnings had increased by $6,000. That's about 30%. And their annual welfare income had declined by $500. They also had improved credit scores. They had reduced debt levels and reduced credit card and derogatory debt. I can talk more about it. I'm running out of time, so there are other studies I'm happy to talk about, including one in New York City. I just want to emphasize quickly before I stop that HUD is really investing in trying to make this program better. We worked with them to develop a guidebook of promising practices based on the experiences of a number of FSS practitioners around the country. That came out along with an online training. We are also working with them on a system for measuring performance measurement system that is very close to coming out. It's nearly done, and that will help programs sort of ensure that they're accountable for results.
Right.
I look forward to the opportunity to answer any questions that you may have. Thank you.
Thank you, Mr. LaBelle. Mr. Spann, you're now recognized for 5 minutes.
Good afternoon, Chairman Duffy, Ranking Member Cleaver, and members of the subcommittee. Thank you for the opportunity to testify. My name is Stacy Spann, and I'm the Executive Director of the Housing Opportunities Commission of Montgomery County in Montgomery County, Maryland. Our Housing Commission is the largest provider of high-quality, amenity-rich, affordable housing to low and moderate-income households in our county. And as the designated public housing agency, we're serving approximately 13,800 households through all of our housing programs, including administration of the voucher program, as well as other Section 8 programs. We also operate non-federal affordable housing programs, as well as finance and develop affordable housing units throughout our county. In our role as housers, we take great pride in the enrichment of programs and supportive services we're providing to connect our customers and helping folks reach their fullest potential. HOC is delivering robust workforce and education programming for adults and youth, including our Fatherhood Initiative, a suite of educational opportunities for adults and youth we call HOC Academy. And in addition to HUD's FSS program, we're working hard to transform lives by providing career development support. The participants that we're working with receiving comprehensive case management and service connections that support them in gaining and improving employment through one-on-one assessments, goal setting, referrals, skills training, and education. Since HOC's FSS program began in 1993, we've graduated 938 participants from the program. And it's actually evolved significantly since we began. In 2015, we had a shift in leadership and took the opportunity to examine our program, look inward, and really figure out how we could administer the program better. We wanted to ensure that enrolling customers in our FSS program and guiding them through the process was not just pro forma. We're not interested in simply checking the box and tallying the numbers. We took a step back and asked ourselves, what are we doing to help our customers achieve progress? Are we requiring people to take meaningful strides towards self-sufficiency in order to graduate? And we understand that making a decision to change your life is difficult. As an agency, what we wanted to do was be certain that we're giving our customers our best effort to do this personal and extremely deep work. If participants were graduating only to find that they were accessing emergency rental assistance programs or facing eviction just a few months later, then we're clearly not doing our jobs. So in taking the time, we actually decided to retool the program in its entirety. And in fact, the case managers are now the persons who are responsible for working with families from start to the end. And when they're coming up for recertification, our folks are actually doing that work as well. So we lost, unfortunately, some individuals, but what we gained was real quality in the group of individuals that we're working with. We reopened our program, and just last week on the 21st, we celebrated our graduation. And there we were celebrating the accomplishments of 63 FSS graduates, where 52% of those graduates were unemployed at enrollment, 100% were employed by graduation, having at least 12 consecutive months of employment. And as a group, the average earned income of the participants quadrupled from $8,000, a little over, to about $37,393 annually. So that's a huge increase, but we've got more work to do. Through our mortgage programs, our own home ownership initiatives, we're able to support families. And while our graduates are accomplishing much, it is little as compared to their peer group in Montgomery County, where the average income is over $100,000. So that gap is significant. So we've got miles to go. I wanted to take, in my last seconds, an opportunity to thank you and say, while this is difficult and challenging work, authorities, agencies who are doing the work should not be penalized when they take a step back and really examine how they're meeting the customer. And so if there are any improvements to be made, certainly I'm happy to work with this august group on the panel, as well as those at HUD, The improvement ought to be that every single family can't do the same work the same way. Every single family is not engaged the same way. And unfortunately, there is no one-size-fits-all in this program. Thank you very much.
Thank you, Mr. Spahn. Ms. Siglin, you're now recognized for 5 minutes for your opening statement.
Good afternoon. I'm Kristen Siglin, Senior Vice President Policy at Housing Partnership Network, a business collaborative of nearly 100 nonprofits that develop and finance affordable housing and community development projects in all 50 states. HPN members work together on businesses that make them more efficient and effective at delivering affordable housing. For example, HPN members together own a property and casualty insurance company that insures their apartments. HPN members also work together on public policy and learn from each other, which is what leads me to FSS. In 2014, 2 HPN members, Preservation of Affordable Housing, which you already heard from, and the Caleb Group approached me that they wanted to offer FSS to their residents. At the time, FSS could only be administered by housing authorities for public housing residents or voucher holders. But FSS is a very intuitive model that makes a lot of sense. It combines the elements you've heard of stable, affordable housing, financial coaching, and an escrow account to help the residents build assets. So in 2015, the Appropriations Committee, with some support from members of this committee, agreed to open up the FSS program to project-based rental assistance. So when the law was changed, these HPN members who'd already been thinking about this and wanting to do this asset building work with their residents got to work. And you've already heard from POA, so I'll talk about the other HPN member, which is the Caleb Group, who actually worked with Compass Working Capital as on the coaching piece of the project. And the Caleb Group owns 2,000 units of affordable housing in 4 states: Massachusetts, Connecticut, New Hampshire, and Maine. And their first FSS projects were in Willimantic, Connecticut, and another one in Gloucester, Massachusetts. And the program the residents have not completed their 5 years yet they've already, of the 34 families that begun the program, they already have 5 of them have graduated. 4 of those families created escrow, and the average escrow was $8,543. So that's significant. 3 of them used that escrow to buy a home. So the CEO of the Caleb Group, Debbie Nutter, emailed me, "The major point is how satisfying it is to show folks how they can make the leap." That's what she wanted me to tell you. And so there's 2 important points to make about FSS. One is that the program is voluntary. Housing authorities and project-based owners choose to offer it or not, and residents choose to participate or not. And I think this aspect that it's a coalition of the willing makes it an effective program. The other thing is it's very small in the universe of HUD programs. According to the latest figures from HUD, there's 72,000 families currently enrolled in FSS. So if you find this model appealing, there's something you can do to help. Introduce and pass legislation similar to the Senate legislation introduced by Senator Roy Blunt of Missouri and Senator Jack Reed of Rhode Island. And to us, the most important part of the Blunt-Reed bill is making permanent that extension of the program to privately owned projects with rental assistance. Because currently, private nonprofits are not eligible to compete for the service coordinator dollars because housing authorities that run the program, that money's all spoken for. So our members do private fundraising, as Aaron Gordenstein did. So it's hard to convince members to open an FSS program when they want to be able, it's a 5-year program. You need to offer that escrow every year. So it would be very helpful if you all permanently authorize the extension of FSS to project-based rental assistance. So in conclusion, I'd like to commend you guys for shining a light on this program. If new housing providers can offer FSS for the residents, we can continue to amass evidence on what works to help residents achieve more success. This is a voluntary program that could become a model for using the power of stable, affordable housing to help families achieve their dreams. It would be very impressive in a time of partisan division over so many issues for this committee to come together around improvements and expansion of a program that makes a great deal of common sense and gives families a tangible path to hope and opportunity. Thanks for inviting me.
Thank you, Ms. Siglin. Ms. Riva, you're now recognized for 5 minutes for your opening.
Good afternoon, Ranking Member Cleaver and members of the subcommittee, and thank you for the opportunity to testify today about the Family Self-Sufficiency Program. My name is Sherry Riva, and I'm the founder and executive director at Compass Working Capital. We are a nonprofit financial services organization headquartered in Boston, Massachusetts. I'm here today to share my deep support for the FSS program and my thoughts on ways in which Congress can take action to expand the scope and impact of the program around the country. There are 3 key points I would like you to remember from my testimony today. First, the FSS program empowers low-income American families to transform their own lives. It provides opportunities for working families to save for and invest in themselves, in their children, and in their futures. Second, as you heard from Jeff Lubell, the FSS program is a promising evidence-based model that has enjoyed strong bipartisan support since it was introduced in the 90s. FSS promotes work, it helps people build savings, and it creates the conditions for families to move themselves up and out of poverty. It is ripe for expansion and for greater public-private partnership. And finally, the most important action this subcommittee can take is to introduce legislation that mirrors the provisions of the Family Self-Sufficiency Act, the bill that was recently introduced in the Senate. So let me just briefly take a step back and tell you more about Compass, how we do this work, and why we chose to focus on the FSS program as a tool to achieve our mission. We are not housers at Compass. Our mission at Compass is to help low-income families build assets and financial capabilities as a pathway out of poverty. And our work is grounded in 2 core fundamental beliefs. First, poverty is not just an income problem, it is a wealth problem. All people need and deserve access to opportunities to save for and invest in themselves and in their families. And the second belief is this: low-income families have hopes and dreams for themselves, their children, and their futures, as all of us do. And our experience at Compass is that families want to work, they are working, and they want to get ahead. And our job, our first job at Compass, is to tap into these deeply held aspirations and invest in families' abilities to transform their own lives. So at Compass, we saw in the FSS program an incredibly powerful tool to help low-income American families who live in subsidized housing escape poverty and access broader economic opportunity. And that's why we have dedicated ourselves for the last 7 years to expanding the scope and impact of this program around the country. The Compass FSS program builds on the fundamental components of the FSS program, which is affordable housing, service coordination, and access to this escrow account, which my fellow witnesses have discussed. And we combine that core model with robust financial coaching and education to drive even stronger outcomes for participants. We partner with public housing authorities and affordable owners in Massachusetts, Connecticut, and Rhode Island. And building on our success in New England, in late 2016, we launched a national network to support mission-aligned partners in other parts of the country to unpack the power of this wealth-building model in their own communities. And our initial partners in that national network are in Maine, Missouri, Mississippi, and Illinois. And we field new inquiries from housing partners around the country every single week. The best way, though, to hear and understand the power of the FSS program is to share a story. So I'm going to, in closing, take a moment to tell you about Tanya Febrile, who's a graduate of our FSS program in Lynn. When Tanya enrolled in our program, she had been receiving housing assistance for 4 years. She was working full-time, raising her 2 kids, but she had bigger dreams, including owning her own home. At the time, Tanya believed that owning a home wasn't, and these are her words, not mine, wasn't for families like mine, a single low-income family, a single low-income mother who came from a family where no one had ever been a homeowner. The FSS program was just what Tanya needed to achieve her dreams. After she joined FSS, she started working with a financial coach. She increased her income by nearly $8,000, improved her credit score by 140 points, saved about $3,000 in her escrow account, and became a homeowner. She graduated in 2015, became a homeowner and the first in her family to do so. The truth is, and the most important thing to say today, is that there are so many more families like Tanya's that we can and should be reaching in this program. By bundling affordable housing assistance, support for families, and a savings account, FSS is a fundamentally strong program, and we believe it can be even stronger and help more families escape poverty and achieve their dreams. Thank you.
Thank you, and I thank the witnesses for their testimony. I'll now recognize myself for 5 minutes for questions. In my area of Central Florida, we have significant need for affordable housing. In fact, in the Tampa Bay area, we have over 13,000 applicants in a waiting list for affordable housing. So affordable housing not only has to be affordable, but it also has to be available. And FSS has been probably one of the more premier programs because not only does it allow them to develop over time, of course, their home ownership, but instills in them a sense of dignity in family, a sense of dignity and success of what they've been able to accomplish, achieve, and own. And so for that reason, the Tampa Bay Housing Authority went back to HUD and asked them if they could expand the program, and I was told that unfortunately HUD informed that they were not allowed to do so and provided little explanation for that. And my first question is have any of you all experienced similar situations with HUD in trying to expand the FSS programs? Who would like to start? Yes, sir, Mr. Lovell.
Yeah, if I may, my understanding is that any housing authority that wants to expand its program is absolutely free to do so. In order to do that, they simply have to revise their FSS action plan and submit it to HUD. The question is whether they can get funding for the FSS coordinators that run the program, which is different from being able to operate the program. So there's sort of two things. So they could expand it very easily by submitting the revised action plan, but the problem is that funding has been level for many years, and their first priority has generally been provided to the agencies that are currently running it so that they can continue to serve people throughout the course of their 5-year period. So in order to provide additional funding for more agencies, there would need to be an overall cap in funding provided. I know that's not your job, you're the authorizers, but I'm just explaining, I think, what the issue might be.
I appreciate that. Anyone else? Mr. Spahn?
Sure. So I certainly agree with Mr. Bell. It's completely that. I would also add, though, that there's a funding formula, and so the challenge becomes, again, number of persons who are registered participants versus quality of actual engagement. And so the truth of the matter is we opted for quality of engagement so that once someone actually ascends and graduates from our program, that individual is able to support his or her family better.
And I think that's the point there. If we're looking at scoring this for increased funding and to make sure that we can afford to do this, we've got to look at the outcomes. And Mr. Spahn, I think you hit on that in that funding formula. And I guess the question would be, at what point do we see the rate of return to HUD with regard to the participation in the program as these participants move on? And I guess the best way to quantify that is what is the success rate? I know you talked about having some 923 graduates in your program, or 938 graduates so far. How does that compare to those who have not made it? I mean, is it if you were to ratio this, is it a 70% success rate, 50%, or can you quantify that?
It's generally going to be somewhere in the 30% rate of success, maybe a little higher than
30?
that. Around 30,
Okay.
but again, our program is different from other programs. So there's no, this sort of comparative thing is important. It's helpful. However,
And do most of them want to help themselves? In other words, I would think that the first step to success is wanting to help yourself. And I guess that could also be an impediment if they don't, and that would impair your ability to be successful.
I don't think this is really a question of whether or not individuals and families want to help themselves. I think every single customer we serve wants to help himself, herself, or her family. The issue is that life is happening while they're doing this.
Right. And I think, Ms. Riva, I think you mentioned that I think that becomes a scenario for Compass. I mean, you teach these life skills. You teach the financial planning. You teach the ability to see the success of their incremental savings and create the escrow accounts. And I'm not suggesting, Mr. Spahn, that they're not wanting to be successful. I understand the outside influences, but it requires a good coach. It requires a good counselor. And I guess, Ms. Riva, you mentioned in your testimony that, quote, you should include individualized, client-driven financial coaching and education to help participants chart and follow path to reach their financial goals goals and become more financially secure. And I'm hurrying because I'm running out of time here. Is your program in addition to or greater than what is being required of FSS?
So in the Compass model, coaches are essentially taking the place of coordinators and integrating this coaching-driven model. But there's no reason why a public housing authority can't integrate coaching and education. It could be through community partnerships.
And even hereafter, even after they've had their escrow invested, bought their homes, is there follow-up such as,
Yes.
see how that's the important thing?
Yes.
Thank you. I see my time has expired, and now, Mr. Keown. Okay, recognize Mr. Keown for 5 minutes for questioning.
Thank you, Mr. Chairman, and thank you, Ranking Member Cleaver, and thank you all for being here to testify and for being here as witnesses. Just 2 weeks ago, there was an article published in one of our local newspapers talking about the success of the Family Self-Sufficiency Program that was run by the Southern Nevada Housing Authority. Taquana Edwards is quoted saying that she, and I quote, loves paying her bills on time, which is a sentiment that sounds funny until you live in a situation where paying bills becomes a major point of stress. So I just have 2 questions, and I think anybody can answer these. So first, why don't more people participate in the FSS program? And secondly, do you think that many more people would participate if agencies and owners had access to increased funding to hire more coordinators in order to open enrollment?
So I'd be happy to start answering that question. So the first question is, one of the reasons more families don't participate is limited coordinator dollars. So that naturally, the FSS coordinator grant naturally keeps the program small. At Compass, with our public housing authority partners and our nonprofit housing partners, we have actually leveraged philanthropic investment to prove that families want to work and they want to get ahead, which is how we have gotten to enrollment rates as high as 65% at some of the properties where we're working in partnership with POA. Really important to emphasize this. Low enrollment rates are not a reflection of families' desires to move forward. And then the second thing I would emphasize is the outreach and marketing in the program is something historically we have felt could always be strengthened, and to be marketing to people's hopes and aspirations, not to compliance and not to the rules of the program, because people feel afraid. They're already afraid. And so a lot of the work we've done with Compass that we're sharing with PHAs through our national network is leading with aspiration and watching how that drives enrollment in the program.
Can I just add to that, if that's okay? I think what we've seen, why we've got a higher enrollment rate, is the engagement of our property management staff on the site, the entire team, not just the property management staff, but the maintenance. In fact, maintenance staff have helped in recruitment of families. Those are the people who are interacting with these families every single day. They know them best. And then when you combine that with the financial coaching, it's very powerful in terms of really trying to recruit families into the program and then sustaining them going forward. And I think having some additional funding over time could certainly help get more organizations more actively involved and really scale up the program. And that's what we need to do in the months and years ahead.
And I would just like to add that POA raised private funds. They used some retained earnings from other part of their rental portfolio and raised private philanthropic money to pay for the coordinator. Not all organizations can do that. So as so many improvements have been made in recent years in FSS, if we really want to scale it up, you've got to look at the funding. Thank you.
Thank you, Mr. Chairman. I yield and render my time.
Thank you. The chair now recognizes the gentleman from Pennsylvania, Mr. Rothfuss. Is not there. Okay. Mr. Trott from
Thank you, Mr. Chairman.
Michigan.
Appreciate all of you being here. And so my research indicates that the appropriation is about $75 million a year. And just so I understand the program, and I frankly don't know a whole lot about it, so I sure appreciate your being here. Is that $75 million largely used, and anyone can answer my questions or general questions, is $75 million largely used for grants for the coordinators and then also to fund the escrow?
It's used entirely to fund the coordinators. The escrow is funded separately out of the normal sort of subsidy formula for the 3 main rental assistance programs.
Okay. And the number someone mentioned 72,000 people a year participate roughly. How many people graduate, would you say, annually?
So it is around 30% of program participants who end up graduating. But I want to emphasize
it's a multi-year.
It's a 5 to 7 year program.
Right,
So if you looked at any given cohort, roughly 30% graduate. But I want to emphasize a couple things. One is that even if you don't graduate, people can benefit from the program because they're getting coaching, they're finding jobs. Keep in mind, unlike other programs, if you decide, for example, to move in with a boyfriend and you're no longer in public housing, you have to leave the program because you have to be in subsidized housing, right? So some people who don't graduate are actually have positive outcomes. Some have negative. I don't want to say this program works for everyone.
Right.
And I do think that some emphasis on improving graduation rates would be good, but that responds to your question.
Great, that does respond. And kind of along the same lines, the benefits of the program independent of graduating and getting the escrow. Someone mentioned, help them make that leap. I think it was Ms. Siglin. What is the biggest challenge, if you could each, is it transportation, housing, increasing salary, life? What would you say the?
I think it's the entirety of it, right? It's all of that and some. We're a housing authority. We are housers every single day, and so we are meeting folks where they are to provide that service, and it's an entire continuum. This isn't, while there are beginning and end points, it's a continuum that frankly has steps, and I think the rigor of just life itself, in addition to something else, is quite a bit. The other part is, you have to remember, these are customers who are essentially laying their souls bare to a confidant. Right. And that is incredibly personal work. Most of America doesn't do that work. And so doing that over a 5-year period is incredibly difficult. And so a 30% graduation rate really is substantial given, frankly, very small resource allotment to it.
Appreciate that. Thank you. Ms. Riva, you told the story about Tanya, I believe, in her dream to own a home. Have any of you worked with the private sector in terms of mortgage lenders and to help facilitate and make that a goal more attainable? Is that part of
Absolutely.
what you... It certainly be clearly independent of
Yeah.
this program, but that would be the logical step for some of these folks, right?
Absolutely, and the original statute for FSS really positions it as a program designed to take advantage of those partnerships in the community. And so in the markets that we're in, we're always working with affordable mortgage providers, building those relationships with banks around their CRA commitments. And I just want to mention on graduation, I think it's important. We're an earlier program at Compass, but we're tracking closer to 75% of our clients are graduating. And I also wanted to mention the HUD data as among graduates, 36% do exit subsidized housing. So I think that's an important piece. Not all families get to that point at the same moment, and exiting isn't right for everybody at 5 years, but families are making progress on that path to financial security. And so just important to point out those statistics as well.
And maybe another dumb question here, but 75 million, how many coordinators are there, if you had to estimate? And how big is the caseload for a coordinator?
So HUD has a standard that the caseload should be at least 50 per full-time coordinator, although the first coordinator can be 25 because they have other responsibilities like running the program. Some agencies routinely have higher caseloads and are trying to be more efficient. And I would say compared with other programs, this program is pretty efficient in terms of the number of people who are being served per coordinator.
And I'm out of time almost, so I got to ask one last question. Any concerns regarding fraud and abuse in the program, maybe coordinators that really don't have the family's best interests, and any concerns that we should be focused on to try and improve the integrity of the program?
Not that we're aware, not that I'm aware of.
Okay. I'm out of time. I yield back, Mr. Chairman. And my one other comment, it would be interesting to have a coordinator here testifying. That would be a great addition to the panel. Thank you again for being here.
Thank you. The gentleman yields back. The chair now recognizes the gentleman from Texas, Mr. Gonzalez, for 5 minutes.
Thank you, Mr. Chairman. This is for Mr. Spann. Mr. Spann, in Montgomery County, Maryland, A person needs to earn more than $33 an hour just to be able to afford a 2-bedroom apartment renting at fair market rate. That means that someone earning minimum wage would have to work 145 hours a week, more than 3 times the minimum wage. You mentioned in your testimony that while the average annual earned income is $37,393 by your clients, is a tremendous personal milestone. That is a far cry from a full economic self-sufficiency, especially in an area where the median income for a family of 4 is $110,300. Based on this data, it's clear that families need better job opportunities that pay much more than the minimum wage to become self-sufficient. How can the FSS program help improve employment prospects beyond minimum wage positions?
Well, thank you. So further in the testimony, and frankly, even prior to that, we talk about the actual continuum itself. And so this is not simply a matter of financial coaching. This is not simply a matter of finding someone a minimum wage job. It also includes a great deal of workforce training, in addition to educational opportunities. And this is about how we meet a family who's a participant in FSS with the entire basket of HOC services. And so for us, that is exactly the mission. How do we close the gap between that livable wage in Montgomery County and what some of our graduates are making? And that's the average number that you're getting. So we do have some graduates who, frankly, are at a higher level. But the fact of the matter is, average, many of them are right there. And so what we've seen in tremendous success is attaching folks to those educational opportunities that then help for career advancement, but also allow for career advancement, offering summer opportunities to not just the high school students, but those college students of families who are participants in not just FSS, but all of our programs, and making sure we have linkages with partners who are committed to this work. Many of these folks are working with Compass. We happen not to be working with Compass. But we have actually found partnership throughout Montgomery County government and nonprofit sector in Maryland. And so let me just offer you one of the best testaments of how successful this program can be is that this audience is not filled with participants because they are at work.
Fair enough. Thank you very much. I yield back the balance.
Gentleman yields back. The chair now recognizes the gentleman from Pennsylvania, Mr. Rothfuss, for 5 minutes.
Thank you, Mr. Chairman. First question for Ms. Riva. This subcommittee has been looking at a number of HUD programs and considering their effectiveness and uniqueness. As I looked at this program, I wondered whether the goals of FSS could be achieved absent the program. Could you please talk about whether housing authorities would be able to deliver the FSS-type services and outcomes without the program?
Thank you for your question. So as I mentioned in my oral testimony, we think what's unique about the bundle that FSS provides is the combination of affordable housing, one-on-one support and service coordination for residents, and the savings account. And where we sit at Compass in the asset building space is a belief that assets and wealth really matter in helping families move forward. So there are other programs and other important programs that HUD runs that support residents and need to stay in place. What's unique about FSS is this bundle of promoting work, promoting savings, and providing support one-on-one to residents to help them do that. It is unique among anti-poverty programs in this nation and is the largest, actually, asset-building program we have for low-income families in the United States.
So is the asset building part that's unique, for example, and maybe anybody on the panel can address this too, the synergies that this program might have with, for example, the Moving to Work program? Mm-hmm. Can anybody speak to that?
Yeah, I can speak to that. Thank you for your question. So one of the nice things about FSS is it's open to all housing authorities, and it is really one of the only ways to provide a financial incentive for families to increase their earnings that's available to them. And so that is one of the important things. The Moving to Work program gives greater flexibility to adapt program rules, and there have been a number of agencies that have taken advantage of that to really experiment with different approaches, including variations on the FSS program. So Cambridge, which is one of the agencies where Ms. Riva works, they've experimented with a different model that they think can allow them to expand FSS to a much larger group of people. Portland Housing Authority in Oregon is doing something similar. So while I think the nice thing about MTW is it gives the flexibility, but it's only available to a smaller number of agencies. So
Okay.
FSS is a important thing that's available to everyone.
If I could say go ahead, Mr.
I was just going to say that we view FSS as a component in a broader program offerings under what we call a Financial Opportunity Center, and that's what we launched in Independence, Missouri, where you have FSS, you have a college savings program, you have job training and employment, you have educational programs, various other social services programs, child care, and it really helps to get people engaged by having that financial incentive in FSS, but they're taking advantage of a broad array of programs. So we don't view FSS in isolation of the broader array of offerings and opportunities that may be available for low-income families.
If I could go back to Mr. Lovell for a minute, I want to talk a little bit about self-sufficiency as a goal. When I speak with public housing advocates, I often ask them what their metric for success is, and I happen to believe that self-sufficiency should be the chief metric that we try to meet, at least for able-bodied adults. I think that this is the moral approach, and I worry that we are failing the American people when we create the conditions that allow multiple generations of a family to remain in poverty and dependency. Naturally, a program like FSS seems like it could be an attractive way to meet this goal of self-sufficiency. Though the program is still being studied, I understand that it has already demonstrated some outcomes that are positive on net. If the program proves effective, should we consider making participation mandatory for all able-bodied adults?
Right. It's an excellent question, and it's one that may be difficult to answer in 1 minute, as you might expect. But I would say a few things about that. First of all, I would agree that there are very strong early evidence from FSS of success. We just completed an evaluation that found earnings gains and improvements in credit scores and reductions in debt and a lot of positive outcomes. But I should stress that FSS, the way it's set up and the way it's funded, is funded to work with people who volunteer to be in the program. These are more motivated people, right? So if you were to expand it to other people who were not necessarily motivated, the question I would ask is, what would that do to FSS in terms of the number of people that would be served, in terms of the type of program model that would need to reach those people? And I would say that if we made it mandatory and we did not substantially increase the funding so we could provide coordinators to deal with the thousands and millions of additional people who are joining, then we would actually dilute the effectiveness of the program rather than improve it. So I would just urge the committee, if they are thinking about that, to think about the implications, both for the amount of funding that's really needed to make the program work, but also the service model. You might not be able to serve 50 families. You might be able to serve 20 families with a coordinator, right? Because you're going to have to work with them a lot more intensely. And so I would say we just don't have experience with that right now. What we have experience with is a program that's designed to help people who want to move ahead get ahead. And we could serve a lot more people today, even with that same model, if we really sort of promoted the program more and provided a little more money. So I hope that's helpful.
That's great. I yield back. Thank you.
The gentleman from Ohio is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to our ranking member. And let me just say to all the panelists today how much I appreciate your being here, not only for your expertise in the area, because it's always great to have people who have actually worked in and lived what we're talking about versus just speculating on it. But more importantly than that, this has been a great committee hearing. Took us a little time to get here, but the interesting thing is we appear to all be somewhat on the same page, and that's very comforting when you can sit here and nod your head with some of the questions on the other side of the aisle. So I wanted to interject that for the record so we can remember that when we have other housing programs that come, or maybe we should just bring you all back on whatever the topics are. But I am a longtime public housing person, some 20 years as a consultant, and oftentimes we don't give enough attention to the smaller programs. But one of the things I can remember from my early years in working in public housing is we always talked about the ultimate goal being self-sufficiency or being self-reliant. And being able to have a program like this is very welcoming, because certainly my time in public housing was far before when President Bush initiated this program. But I'm big on partnerships because obviously we aren't in a position, it appears, to double the funding that you could get. But I think you can grow programs and grow your expertise in a lot of ways. And so one of the things I was reading, because I'm from Columbus, Ohio, and our Metropolitan Housing Authority talked about some of the partnerships with Fifth Third Bank, with the Catholic Social Services, and even Sherwin-Williams paint stores. So I guess I wanted Mr. Spann or Ms. Riva to get your opinion about how partnerships would work, very briefly, because then I have one other question. Either one of you can start.
Sure. The partnerships are absolutely key. And for us, this is about us being, as an agency, a member of a vibrant, functioning community. And so are the folks we serve. And as a consequence of that, our partners in other business for the Housing Authority are also our partners as we go on to support folks as they work through the FSS continuum. So it's incredibly vital to what we do. And the truth of the matter is we would not be able to connect people responsibly to housing or career or even education pathways without them.
And don't you think that it's important that corporate America sees or gets a truer picture of how individuals who live in public housing might be economically deprived, but it doesn't mean that they are challenged academically or in the world of work if given an opportunity? And I'm going to take your nod as a yes, and I'm going to go to the next question for anyone to answer. We've talked a lot about outcomes and metrics and how we can be more accountable, and I'm in full support of that, because the ultimate goal I think that you have is the same as it is for me. So can anyone tell me how you are evaluating the outcomes? I've read some of the studies, the app study that talks about credit rate scores going up, talking about savings going up. Is that the only way, or are there other ways that you monitor, evaluate? Because that's what my colleagues are going to ask me when we start talking about this program and others. How do you prove that it's working? You get 10 seconds apiece. If
Yeah,
everybody
so
wants to say
10 seconds for Compass. So we're a discipline around data collection. We think it's really important in doing this work. And we look at our outcomes across 5 main measures: changes in earnings, changes in credit score and debt. Credit is a tool that is a piece of economic mobility. Access to quality financial products, which is where banks are coming in, increases in savings, and then a 5th is a qualitative measure, which is people's overall sense of confidence and well-being. It really matters to keep marching forward on that path to economic opportunity. That's how we do it at Compass. I think historically at HUD, outcomes have focused primarily around graduation, homeownership rate, exit rates, and in the last year or two, working in particularly with APT, HUD is looking at and introducing stronger performance-based measures, which we're excited about and think will also help to improve the program.
The gentleman from Missouri, Mr. Lukemeyer, is recognized for 5 minutes.
Thank you, Mr. Chairman. Just a few quick questions here. How do the individuals qualify for the program? Do they come to you? Do you recruit them? Put an ad in the newspaper? You're the folks who manage the facilities, go down the road and knock on doors? Or how does this all work?
It's sort of a yes and for us.
I'm
Yes, and more.
Okay.
Absolutely. So it's voluntary. The program is voluntary.
Right,
So
right.
persons are choosing to be a part of it. They're doing so.
You sort of pre-screen them now when somebody comes in and said, hey, I heard about this great program. I'd like to try and qualify for it, and you sit down and you work through an application on it, and do some people not qualify?
What we work through is an assessment.
Okay, assessment.
And so that assessment is really to determine where people are in their own journey, right? But are folks disqualified as a consequence of something other than being out of compliance in another program? No. If individuals is out of compliance in, say, the voucher program or the public housing program, then certainly it's possible that that person might not be able to participate. However, generally, you won't have persons who are out of compliance volunteering themselves. So
We also do a combination of one-on-one outreach with each of our residents, group workshops, information sessions. When people move in, we go over the importance of the program and hope that they consider it. So at all different touch points, recertification.
Often do you recertify, once a year?
Yes.
Okay. What happens if the individual, you said they just moved in, what happens if the person moves away? Are they able to keep this program and to follow them, or does they have to move to a facility that has a coordinator?
As long as they are in compliance with the program, they can take their escrow amount with them. And if they move into another assisted property or public housing where there is an FSS program, they can continue it there. I believe that's the case, if you want to clarify that.
Yeah, it's more or less correct. But if they leave subsidized housing, they're no longer in the program. I mean, that's one of the things that is tied to being in the program, and people do leave subsidized housing for a range of reasons.
But if they went to another facility that they would qualify for, they could continue the program.
They can
and
continue.
As long as that facility had a coordinator, I assume, or the coordinator from the past facility would be eligible to, or able to take them on and continue with them if they move from different cities, for instance?
Well, I mean, one of the things that has happened with the recent expansion of FSS to project-based rental assistance is public housing projects are converting under the RAD program to become project-based Section 8. So when that happens, the residents are protected now that FSS has been temporarily expanded to project-based.
Well, I mean,
so that a resident who is accumulating escrow in public housing can continue to do so.
I mean, if you look at the recent flooding, I mean, you have people who perhaps were in a situation where their facility was flooded out and they have to go someplace else. So, I mean, my question is if those folks can continue on in some other facilities. So, okay. Is there some sort of oversight or accountability for the funds, the $75 million roughly? Do you have an auditor come in and double check to make sure that whomever you're designating as the coordinator, that they are doing their job? What sort of oversight is there?
Well, we're self-funding the program, and so we're not eligible for the coordinator funds, so we're not being audited in that sense from HUD.
However, you have your own self-coordinated funder, or self-funded coordinator.
Self-funded, correct. Okay. And however, we have plans of actions approved by HUD, and then we have regular reporting to HUD with regard to each family and the escrow accounts. So there's significant oversight by HUD, even though we're not getting direct funding from them.
How often do you report to them? Once a month, once a quarter, once a year?
I believe it's quarterly. Yeah.
And HUD is also in the process of adopting a performance measurement system. So all Housing Authority FSS programs that are funded by HUD will be assessed on a series of metrics as a way to ensure
cost-benefit analysis, is that what you're talking about?
Sorry?
Or is it a cost-benefit analysis?
No,
or
it's an analysis that looks at outcomes. It looks at the extent to which families' earnings have gone up relative to other families in the same housing authority. It looks at the graduation rate, and it looks at the number of people that are being served.
A while ago, when you were in your opening statement, or maybe we were responding to somebody else here, you made a statement that because the program hasn't been in place long enough and you haven't had a baseline to compare against, you're not sure how effective it is, but it would appear that you are doing great, I would assume. That's your conclusion.
Who's doing great? I'm sorry.
Well, the folks involved in the program, there seems to be a substantial graduation rate from it, which is great. But you made a comment, I think, to the fact that you didn't have a baseline to compare,
I'm sorry.
or a control group to compare against. Is that,
let me clarify.
Maybe I'm not
I apologize if I was. The program's been around for 25 years, right? So we have a lot of data,
Okay.
and the issue was that the particular evaluation, HUD's first two program evaluations, tracked families over time, but they did not have a comparison group to compare them to, and therefore were not able to make a definitive statement about the impact of a program. The most recent study that we did of Compass, for example, did have a comparison group. We were able to compare the outcomes against a comparison group and therefore be able to say something meaningful about the program's positive impact.
My time's expired. I yield back.
Thank you. The gentleman yields back. Chair now recognizes the gentleman from Missouri, Mr. Cleaver, for 5 minutes.
Thank you. Let me, first of all, again, thank all of you for being here. Mr. Spann, we did try to get 2 of your residents to be here today, but we were delighted that they could not come because they couldn't take off work. And let me also just say, as a former resident of public housing, as a mayor who appointed the housing authority and had oversight of it, and Independence is in my district, as is Marshall and Kansas City, where this program has worked. This is a good program, and it's working well. One of my regrets is that we want this program and other things like it to be incentives to the residents, but it also ought to be an incentive for us to invest more money in the program. One of the, I mean, you hear a lot about programs that don't work, and I've not heard a single member here today make a negative comment about the workability of this program. I have experientially seen it work. All of you have, and my hope, my goal, would be to somehow convince this committee and maybe even the secretary that when we have a program like this, introduced by somebody who is from a different party than me, I could care less whether he was a member of the Oakland Raiders. All I want is a program to work, and this is working, and I'm going to support it, and give President Bush the credit for the wisdom for putting it in place. Now, one of the things that I had a lot of questions I wanted to ask you, and some of them I already knew the answer to, but I wanted to get you on record. But somebody was asked a question about fraud and abuse, we're obviously, I guess we're the oversight committee, so we're supposed to be concerned about that. But to my knowledge, as of today, 10 minutes after 4, that has not been, there's not been any federal investigation or charge against the program for any kind of fraud or abuse. Am I wrong?
I don't think any of us are aware of any such investigation, sir.
Mm-hmm. Yes, I knew the answer, but the point I'm trying to make is, why in the world don't we celebrate this program by saying, look, if we can get 30 or 35% success and invest more money to bring that up to 60%, I mean, why not do it and just sing hallelujah or whatever you sing at church? But I mean, this is a program to celebrate, and I'm hoping that all of you feel good about the fact that that it's been successful and you played a role. Somebody mentioned a fatherhood program. Mr. Spann, can you just go into a little detail on that, please?
Certainly, the Department of Health and Human Services has a fatherhood initiative, a grant. We are maybe one of 2 housing authorities to apply for and receive that funding, and what we've decided to do is include it in our suite of HOC Academy and resident services, along with partnering with the FSS program, so that there are fathers who are identified, supported, and again, we are matching them as quickly and as deliberately as we can to workforce opportunities, to workforce readiness opportunities, educational opportunities, and the like, so that we have fathers supported in our community who are present in their children's lives and active and so forth. So,
let me close that. But I would argue that the success numbers are higher than what we officially report. And the reason for this is that proximity breeds imitation. Somebody in a neighborhood that's run down paints their home, and you look up the next Saturday and people down the street are painting their home. The same thing happens in public housing. I saw it. I know what happens. Or somebody decides to get married. We don't consider that a success, in spite of the fact that they get married, they go on and have a successful marriage and raise children and work and so forth. So I think the success rate is actually higher than we report, than the data would report. So let me thank you all very much for your testimony, and I appreciate the fact that our chair put this on the agenda.
The gentleman's time's expired, so I don't believe there are any other members who have questions, and we have a vote series coming up shortly, so I think that's part of the reason. But I want to thank everyone again for being here, and I have to agree with Ms. Beatty. I believe that this hearing has been particularly productive and informative, and I also want to thank all of you for everything you do in your communities. You clearly make a big difference, and we appreciate it. Without objection, all members will have 5 legislative days within which to submit additional questions to the chair, which will be forwarded to the witnesses. I ask our witnesses to respond as promptly as possible. If you receive any questions, without objection, this hearing is adjourned.